Who the fuck am I kidding? I'm making a video today. Nothing crazy happened, but this is not a point in time where I don't. I feel like I should be making videos every day. So I'm just gonna make a video today. Nothing really happened today, but I'm gonna pretty much touch on all my charts updated, and I'll probably continue to do that on a daily basis. So jumping into it, starting with the macro on SPY. Once again, descending broadening wedge for a year. Breakout, retest twice, reclaim the ascending triangle. The descending broadening wedge transitioned into an ascending triangle. From there, it was sideways towards the end of it. Broke out, gapped up from the breakout, and then saw more upside to 444. Double top there, came down, bounced up to 20 EMA, and now we're finding some more upside here. This looks extremely bullish. I mentioned yesterday that these levels that we're trading on SPY right now we haven't seen since April 2022, all the way back here. So the market is very clearly bullish. Also, having said that, from October 2022 until today, SPY has done nothing but form higher highs and higher lows to the upside and broke both macro patterns, the descending broadening wedge as well as the ascending triangle, and have found upside to 444. Very, very bullish here. 63 days in a row closing over the 200 EMA, and golden cross on the daily, which is extremely bullish on S&P 500. Every time the S&P 500 has seen a golden cross on the daily, it's been followed by some very significant upside. So this chart is extremely bullish. There's nothing bearish about this whatsoever. And once again, I touch on SPY on a daily basis because the previous two squeezes that we saw in AMC, January and June, SPY was rallying to the upside in a very similar fashion to what we're seeing right now. So very bullish here on SPY and very bullish on AMC. Again, this move is perfectly symmetrical. The touch points are perfectly symmetrical, with the blue being your middle. Coming into the red, you're breaking below this horizontal line at 380 on both sides. This one came lower to retest the wedge, and one break above right here to retest the wedge as well. Reject 418 at the end of both red boxes, come down to 380, find a perfect bounce in the green, and then from there, 430 would be the next stop. Three touches on it right here. Break through that, hit 438, reject, and break through and go to 450. We hit 438, rejected, broke through and went to 444. I mentioned this could possibly be the symmetrical equivalent of the 450 that we were looking for, and from 450 we were expecting to come back down to 438, form a W, establish support here before moving higher. Because we didn't come to 450, we went to 444, so we could expect to come slightly lower than 438, potentially back down to this 429, 430 range and find support there. And we found a bounce. I'm pretty sure the low from the 444 move was roughly 431. And since then, we found a bounce there and came up to 438. Just keep in mind, this 438 range right here is a pretty strong resistance zone, and I mentioned that this move from the 450 rejection was a W, more or less, and we could potentially expect to do the same thing here, where we would be coming back down one more time and forming a W before we move higher. Having said that, looking at the uptrend on SPY now, and this would be the end of the ascending triangle here, where you fake out, come back down to support, and then you form this uptrend that breaks you out. You have your retest, and then you keep bouncing off this trend here, this bull trend, up to 444 is where we found our local highs. Again, we haven't seen these levels here in over a year on SPY, so the market is extremely bullish. So from 444, we double top, break below the bull trend, and we have this descending channel here that we spent the week in, broke it to the upside, and we've seen upside since. I am not convinced that this was the retest right here, so I would not be shocked to come back down and find a bounce here. Actually, in doing that, we would be forming a W, where we would come back down, retest this breakout, probably chop down here a little bit before moving higher, and this would actually play out as a W, the exact same way that we saw right here from the 450. You come down and form this W at 438. So very bullish on SPY. Now jumping into AMC, we survived day one of the court case. Pretty solid day today, and one more day to go. So once again, if we do not break sub 3 tomorrow, or sorry, sub 4, and come to the mid 3s, the bottom is in my opinion, more than likely. And honestly, I don't think we are. I don't think we're coming back down sub 4. I think the bottom's in, and we are now trading in an uptrend that, in my opinion, will be taking us to our squeeze. So jumping into that now, starting with the macro on AMC. This macro dates back to IPO pretty much. So from 2017, you have this descending trend line, comparably to the descending trend line we have here from the breakdown in the flag from the June highs that we saw in November. You have this descending trend line. So starting with the green, you have this W move more or less. Same over here. The red is more or less a cup, and same over here. And then the blue, you come down, bounce up, come all the way back down, curl up towards the end, come down, bounce up, come all the way down, curl up towards the end, before dropping down to this flat portion here, this orange, purple, and blue box, comparably to this orange, purple, and blue box here. And we would actually be in the blue box, having just hit our third peak of the tri-peak. Actually also just hit the bottom, the quote-unquote lower low that we were looking for. Doesn't look like we're getting a lower low, and I mentioned that we didn't have to. So we would be in this uptrend right here from the bottom. This is very blurry, but there's an uptrend here that you form that breaks you out of the triangle, and from there you squeeze, and that's exactly where we are right now. Third peak of the tri-peak, the bottom we were looking for, and now we should be forming an uptrend that should break us out of this triangle and take us to our squeeze. And I also mentioned that this descending trend line, there's no touch points on it pretty much at all, and same over here. So that's the macro. Now this is exactly what I just showed you, except I removed the color boxes from the flat portion, so it's less cluttered and a little bit more visible. And I have some lines here. So 1, 2, 3, 4, 5, 6 takes you to the blue. 1, 2, 3, 4, 5, 6 takes you to the blue. And then from there you drop down to the flat portion. This 3 fractal sequence here that took you to your squeeze in January 2021 is exactly what we're playing out again right now. So from that 6 point in the blue, when you come down to the flat portion, you have 3 touches, 3 bottoms at the bottom of this horizontal line, this green horizontal line here. Same right here. We would have just hit our third bottom, and now forming this uptrend here that should break us out of the triangle, take us to our squeeze. Again, as we get a little bit closer to the breakout here, I'm gonna touch on the price targets in depth, very thoroughly, the macro Fibonacci extensions, and what we could possibly expect for the squeeze. Once again, just touching on it briefly, $140 price target is my low ball based off of macro Fibonacci extensions, which does not account for the reverse split. So 140 would be AMC squeezing right this second. If we squeeze right now, not accounting for the reverse split, we would go to $140. With the reverse split in effect, it would be $1,400. And once again, to extend on that, I'm leaning more towards the squeeze that we're about to get here is going to be the MOAS, and those numbers are going to be much higher than $140. So this looks very good. Now, jumping into the micro, and I combined the micro with the time as well. So again, what we're looking at right now on the micro is, so the macro, when you come down and you break down from the blue here, down to the flat portion, this orange, purple, and blue box here, comparably to this orange, purple, and blue box here. So we're zooming in on this flat portion at the end of the macro, right before you squeeze. So that's what we're zooming in now on the micro. So again, this orange box here is more or less a W. You have some chop at the bottom of the range here, which brings you back to the top. Same thing over here. You come down, you have some chop at the bottom of the range. Support resistance of the current cycle is much tighter, so the chop down here was much tighter as well. Brings you back up to the top. Purple is more or less a cup, same that we see right here. And the blue is the W with the tri-peak in the middle, a very symmetrical move that breaks you out of the triangle and takes you to your squeeze. And then the blue, same thing over here. You have your first bottom, your tri-peak, and then our second bottom right here, which now we should form an uptrend, which breaks us out of the triangle, and that would take us to our squeeze. Now, also I have this white horizontal line drawn across from the second peak of the tri-peak, where you come down and bounce up to the third. So second peak of the tri-peak, you come down, bounce up to the third. I have this horizontal line drawn straight across here. So when you come down in the blue box, you actually break below this horizontal line, pop above it, and then you come back down to your first bottom, the first low in the blue box. Same thing over here. You break below it, you come back above it, and then you come down to your first bottom. It runs right under the purple, the U in the purple, and then right across the W, the chop at the bottom of the W, right across that, and actually right above this gap here. Same on both sides. So this looks very good. Now, this is the micro, and now going over the time, the date range of the micro. So looking at the January 2021 cycle here first, from the start of the flat portion until squeeze day. So from the start of this until January 27th, 2021, the first squeeze that we saw in AMC was 342 days, almost a year. Now, with that, from the start of it until the third bottom here, so from the start of the flat portion until the third bottom is 320 days, and in the current cycle, from the start of it to the third bottom is 210 days. So the current cycle, we're actually moving through this three fractal sequence much faster. 210 days versus 320 here, roughly 3.5 months faster than what we saw in 2021. And with that, and I'm not saying that there's any significance here, but we are moving through this faster. So just looking at this from a logical standpoint, 342 days from the beginning until the squeeze, and 320 days from the beginning to the third bottom. So from the third bottom until your squeeze, until your peak, was 22 days. So keep in mind, we're tracking this faster. So again, just so everyone's following, from the beginning until your squeeze, January 27th, the peak here, 342 days. From the beginning of it until the third bottom, 320 days. So from the third bottom until the squeeze was 22 days. And we're moving through this faster. So I'm just pointing that out. This could accelerate very quickly, and this could get parabolic fast. So I'm just pointing that out. That's that. I was just playing with the chart actually before, and I threw on area rather than candles, and this looks fucking insanely good. This would, again, just be looking at the micro, looking at the flat portion, what we were just looking at, the orange, purple, and blue of the 2021 cycle, comparably to the orange, purple, and blue of the current cycle. So that's exactly what we're about to look at right now, except it's not candles, this is just the area. And this looks very, very similar on both sides, where the 2021 cycle would be on the left here, where from the start of it, you come down, you bounce up here towards the end, as we do here. You come down, bounce up towards the end. You come down all the way to the bottom, and then you have the chop here at the bottom of the range, same as we do right here. And then from the bottom, and this would be your first bottom, comparably to the first bottom here. From here, you have three peaks here, all in, and they're all higher. So this one is the lowest, this would be the middle, and then the highest peak here. Same exact thing here. So the lowest, the middle, and then the highest peak here. Now from that high peak, you come down, and you this is the horizontal line that I have drawn across, where you break below it and then come back above it. You have the exact same thing over here, where you break below it, come back above it, and then from there you get your second bottom, and that's exactly what we have here. So that would be the second bottom, just like right here. And from that second bottom, you find a bounce, and then you get into the tri-peak iteration, which is exactly what happened here. We got the tri-peak, and then from the third peak of the tri-peak, you come back down to the third bottom, as we did here, and then you form an uptrend from that third bottom, which takes you to your squeeze, and this gets parabolic very fast. It's just a straight line. Once you break the triangle, it's just a straight line to your squeeze. So this looks very, very good, where we would have just hit our third bottom. I said potentially, and more than likely, it would have been a lower low than what we saw in April, the April after hours knife that we got, which would have took us back down to the 350 to 360 range. But I also mentioned we did not have to form a lower low. And when we came down here, we had, I think it was on the 1 hour chart, we had 7 wicks perfectly off of 401. So absolutely could not break that sub 4. So that looks very good. And from that, we found a very nice bounce yesterday, end of day, 10% bounce end of day yesterday. And then today we were relatively flat, holding the gains that we saw from yesterday. So this looks very, very good. Now, getting into the micro on a smaller time frame now, and I showed this picture yesterday, where on the left would be the January 2021 cycle, where on your way down you have the red box, and then you have the yellow, which takes you to the channel, the ascending channel here. This would have been the lower low, and then from the lower low you form an uptrend here, which you gap over once you finish playing this out, and this gap over is actually the breakout, and from the breakout you just get a straight line into your squeeze. So same over here, where you have the red and the yellow box, and you come back down to the channel, and then you get this reaction off of the bottom, which is this right here. Again, on high volume, relatively high volume compared to what you saw previously. You have a volume spike here when you get this reaction off the bottom. Exact same thing that we see here, very nice volume off of that. And I mentioned that now we should be in this channel forming an uptrend, bouncing off of the bottom as support and rejecting the top as resistance. So getting into that now, and there's two scenarios here as far as I can see, tracking this on the micro. Scenario number one, and I have some markers here, and it's all the same thing. So the red circle here would be comparable to this. The green arrow here would be your bottom, and then the green circle would have been the reaction off of the bottom. From there you come down, and then you have two bottoms here. The second bottom is slightly higher, as we see here, and then you get a bounce up to the purple circle here. So this is scenario one of where we could be. Again, the volume profile matches up very nicely. Actually, the spike that we saw end of day today in volume would be comparable to this right here. So that would actually line up to exactly where we are. And then from here, we would be expecting downside back down to 422, roughly 420, 422 range. And actually, after hours, we're on our way back down. So far, so good. So this would be scenario one where we would be here. And if this is the case, we are flying, absolutely flying through this. So this would be the best case scenario, would be we're here right now and on our way back down, probably to 420, 422 range, and that would be the best case scenario. And then this would be the other scenario where the markers are all the same again. You have the red, the green would be the reaction off, the green arrow is the bottom, same here. And then from the top you come down, find a bounce up to, back to like the middle of the range. So that purple circle there would be the equivalent to this. It's possible this is where we are too. And then again, still in that either scenario, we'd be expecting downside to come back down to the support. So I'm going to need a couple more days of price action to distinguish whether we are actually here. This purple circle would be right here, or if we're actually really flying through this and we would be all the way here already. It's too early to tell. Tracking on the micro can be very tricky, so it's too early for me to say for sure where we are. For now, I have these two scenarios. A couple more days of price action, I should be able to distinguish a little bit better where exactly we are in this channel. But overall, this looks extremely good. Very, very good. And then the last thing would be the daily gaps. I really don't feel like going over this again. I just went over it yesterday. I don't want to drag this video out. But this would be looking at the flat portion of the 2021 cycle right here, which took you to your squeeze, versus our current cycle here. The gap movements that you see here in each iteration, the orange, purple, and blue, is very, very similar. Pretty much gapping at the same exact spot in each one. So the flags have them marked. I'm not going to bother going through this again. But the gap movements that we see here are very, very similar. And then while we're here on the daily, very nice candle today. You have a hammer candle on the daily today. That looks very, very nice. Very, very bullish. This looks very good. So for tomorrow, either scenario you're looking at, and we're already on our way back down. So potentially we just open at the bottom tomorrow, and then we would see upside. But either scenario we're looking at right now, we're coming back down to 420 roughly. And that's pretty much that. I'm not going to drag this video out. 18 minutes. That's pretty good, I think. That's it for this video. I'll be making another video tomorrow, more than likely. Everything looks very, very good. No complaints whatsoever. This looks fucking crazy. I really like the way this looks. And yeah, so for now, we're just going to be tracking this on a daily basis on the micro, following the tracking this channel here and seeing how this plays out. So far, so good. It looks very good. Could not crack sub 4, so it looks like the bottom is in, and now we should be forming this uptrend here in this channel. And once this uptrend finishes playing out in this channel, we should gap over the channel, and that would be our breakout of the triangle. And then from there, absolute madness into our squeeze, which more than likely will be the MOAS and will be a straight fucking line to the moon. So that is pretty much it for the video. I will catch you guys in the next one.